All right, today we're digging into the incredible, kind of unbelievable origin story of a man who just completely changed the game on Wall Street. And this is not your typical finance bros story. Nope, this is the story of Jim Simons, a mathematician who literally cracked the code of the market, which, of course, leads to one big question.
I mean, seriously, how does that even happen? How does a total outsider, a guy with no background in economics or trading, go on to build the single most profitable investment machine in the history of the world? To figure that out, you got to look at the man and the machine he created.
So on one hand, you have the man himself, a pure mathematician, a government codebreaker with absolutely zero formal training in finance. And on the other hand, you have his creation, Renaissance Technologies, an investment firm whose returns are so good they almost don't seem real. So how did he connect those two dots? Well, the story starts way back. The whole secret really begins with his mind. It just wasn't wired for day-to-day business stuff. It was built for something else entirely, seeing the hidden patterns in the world around him. From a very young age, Jim Simons was a pattern seeker.
And believe it or not, it was a moment of total failure, not some early success that actually put him on this incredible path. A pretty humbling experience as a teenager turned out to be one of the most important moments of his life.
Okay, so get this. When he was 17, he got a holiday job at a garden supply store. And he was just awful at it. Apparently, he couldn't keep track of the simple stuff, like what he'd already swept. He kept redoing work he'd just finished. His boss eventually fired him because he just had no practical skills. It's kind of funny to think about, right? This genius being completely useless at a simple job.
But here's the amazing part. Instead of getting bummed out, Simons had this huge moment of clarity. He realized, okay, I'm just not built for the day-to-day operations. My brain is built for thinking about big ideas. So he decided to lean into it and just become a mathematician.
And once he made that call, wow, his career just took off like a rocket. As a teenager, he was already obsessed with super complex problems. He got into MIT at just 17, crushed it with all the abstract theory, and by 23, he had a PhD in this crazy complex field called differential geometry. He was a legit superstar in the world of pure math.
Now, a mind like that doesn't go unnoticed. He was plucked from the quiet world of academia and thrown right into the secret world of Cold War espionage. This is where he started applying all that abstract math to some very real, very chaotic problems. He became a cryptographer. So what is that really? It's all about finding signals in the noise. It's the science of finding secret patterns and stuff that to everyone else looks totally random. And this experience, it would become the blueprint for everything he did later.
Working for the Institute for Defense Analysis, or IDA, he really perfected this powerful method. Step 1, you just have to assume there is a pattern hiding in all that data. Step 2, you use statistics to hunt down anything that looks weird or out of place. And Step 3, you bring in the heavy-duty math to finally decode what's really going on. That 3-step process was his secret weapon.
You see, his time as a codebreaker gave him more than just a method. It gave him a core, unshakable belief that with enough data and the right tools, you could find a meaningful pattern in any system that looked random, whether that was an enemy's secret message or something else.
So after a public argument about the Vietnam War, Simons was basically forced out of the IDA. He went back to teaching, and even though he reached the very top of his field, he got restless. You know, conquering the entire world of mathematics, it just wasn't enough for him.
And I'm not kidding when I say he was at the top. This guy wasn't just some professor. He became the chairman at Stony Brook University, built one of the best math departments in the world, and even co-created something called the Chern-Simons theory, which is a huge deal in string theory and quantum physics. The man was a legend.
But that restlessness just kept nagging at him. He was looking for a new puzzle, you know? Something messy, something unpredictable, something that didn't have a clean answer already written down in a book. He needed a brand new world to explore with his unique way of thinking.
And that ultimate puzzle, the most chaotic, unpredictable system he could possibly find, was the financial market. And this was it. This was the final pivot, where he decided to point his incredible mathematical brain at a totally new kind of problem.
Now you have to realize just how completely alien his approach was to Wall Street back then. The traditional investor, they came from finance schools, they read company reports, they trusted their gut. Simons, he came from math and code breaking. He didn't care about balance sheets. He just looked for statistical blips, and he only believed in what the mathematical models told him. It was a completely different language.
And it all came from this one simple but totally revolutionary idea.
What if all those price movements that everyone thinks are random aren't random at all? What if the market is just another chaotic system with hidden patterns? And if those patterns are in there, he believed his kind of math was the key to unlocking them.
So in 1978, he did it. He took the plunge. He walked away from academia and started a tiny private investment company. It was nothing like the behemoth it is today, but it was the perfect lab for him to start testing his wild new idea on the real world.
And that moment, right there, was everything. He wasn't just Jim Simons the geometer anymore. He was now on a quest to solve the market itself. And that's what set the stage for one of the greatest success stories finance has ever seen.
You know, his story is about so much more than just making money. It's a lesson about innovation. It really makes you wonder, doesn't it? What other huge, messy problems out there today, in science, in tech, wherever, are just sitting there waiting for some outsider to show up with a totally different way of thinking and find the patterns nobody else can see.
Okay, picture this. It's the 1970s. You walk onto Wall Street and you tell all the big shots that you're going to beat the market using pure science. And your team? It's a bunch of PhDs who know absolutely nothing about finance. I mean, you would be laughed out of the room, right? Well, that's exactly what one man did. This is the story of how that crazy idea became the most successful hedge fund in history. And it all starts with a brilliant mind who first had to admit he was failing.
And this is our guy, Jim Simons. We're talking about a world-class mathematician, a legit codebreaker, but this is not a story about some genius who just instantly conquers a new field. No, it actually begins right here, with his own words, admitting failure. He knew, deep down, he just wasn't a natural trader, but he was convinced there had to be another way to win the game.
So, in 1978, Simons takes this wild leap of faith. He walks away from a top-tier academic career to start a tiny little investment firm called Monometrics, all to test this radical theory of his.
I mean, just think about where he was starting from. On one hand, he had nothing that Wall Street cared about. No trading experience, no clear business plan, literally zero formal knowledge of finance. But, on the other hand, he had something way more powerful. He had this radical confidence in his own intellect, a genuine obsession with finding hidden patterns, and this unshakable belief that math could basically crack any code.
And this really gets to the core of what drove him. This wasn't just about getting rich. See, he used to be a codebreaker for the NSA. So for him, the market was the ultimate puzzle. It was just this incredibly complex, noisy signal, and he was absolutely determined to be the one to decode it. But, that ironclad belief in math was about to slam head first into the messy, chaotic reality of the financial markets. Let's just say the first few years were not a smooth ride. His early computer models were just getting shredded by something called the whipsaw problem. So the model would see what looked like a really nice, steady upward trend, and it would say, okay, let's buy. But then, out of nowhere, the market would just violently reverse course. The result? A massive loss. Their algorithms were just way too simple for how complex the real world actually is. And the result of this was just brutal. They'd have these incredible weeks where they were making a fortune, and then they'd be followed by weeks where they lost every penny and then some. You can just imagine Simons, right? Sitting at his desk late into the night, staring at his screen, just totally frustrated, trying to figure out why his beautiful, elegant formulas were failing so spectacularly.
This is the moment the whole story changes. Simons has this massive realization. If he's ever going to solve this, he has to stop thinking like a trader. He needs to start building a team of pure scientists. The answer wasn't on Wall Street. It was somewhere else entirely. So he did something nobody else was doing. He completely stopped hiring people from finance. Instead, he started hiring elite problem solvers from fields that had nothing to do with money. We're talking mathematicians, cryptographers, physicists, astronomers, even linguists. He wanted people who were trained to find a signal in noise, no matter what that noise was.
Now, two of his most important early hires really show you the kind of genius he needed. On one side, you had a guy named Jim Axe, a brilliant, abstract thinker, but also famously emotionally volatile. And on the other side, you had Henry Lawfer, who brought this cautious, analytical discipline. He was the guy who could take Axe's wild, brilliant theories and actually turn them into code that worked.
But even with this all-star team of geniuses, they ran into a huge wall. And it wasn't the math. It was their raw material, the data itself. You have to remember, financial data back in the 1980s was an absolute unholy mess.
And right here is where they found their secret weapon. They decided to turn this massive problem into their single greatest advantage. They spent years, doing the tedious, unglamorous work of cleaning and correcting historical market data. Their philosophy was simple, but it was so powerful. If your data is cleaner than everyone else's, you will see patterns that are literally invisible to the rest of the world. All right, so now they have a brilliant team and the cleanest data on the entire planet. They were finally ready to go. But funnily enough, their biggest breakthrough was about to come from one of their most expensive mistakes. So here's the story that changed everything for them. The team builds this new, way more sophisticated model. And this model starts screaming at them, warning that a major futures market was about to reverse course and take a huge dive. I mean, every single data point was pointing in one direction. But Simons and his team, they got nervous. Their own gut feeling, their intuition that they'd built up over years in the markets, was telling them the exact opposite. So what do you do in that situation? Do you trust the cold, hard math, or do you go with your very human instinct? Simons went with his gut. He overrode the model, and the market did exactly what the algorithm predicted it would do. The firm lost millions and millions of dollars. It was a painful, gut-wrenching, and unbelievably expensive lesson. But right out of that disaster came the single most important rule at Renaissance Technologies. It is the cultural bedrock of that firm to this day. You trust the models. Period. You never, ever let your gut feelings or your emotions get in the way. This painful lesson led them to their central philosophy, the big idea behind their entire system. It turns out markets are not completely random, but they're also not easily predictable. The truth is somewhere in the middle. Markets are filled with thousands of tiny, fleeting, almost invisible patterns. On their own, each one of these little patterns is basically meaningless, just statistical noise. But when you look at them all together, they have real predictive power. You see, this was a total paradigm shift. The old Wall Street way was to hunt for one big idea, right? That one massive insight, that one home run trade that would make you a fortune. The Renaissance idea was the complete opposite. It was about building a system that could identify and trade on thousands of tiny little statistical edges, all at the same time. It's like they decided to stop hunting for whales and start netting plankton instead. So with this new philosophy locked in, they finally had the blueprint. Now it was just time to build the machine that would go on to change the world of finance forever. And man, was it a long road. From starting the whole thing back in '78, it took them until the mid-'80s to find their very first truly repeatable trading signal. By 1988, the firm gets a new name, Renaissance Technologies, and by the end of that decade, they were finally moving towards full automation. And this was the final, most important step. Simons made the decision to take human beings completely out of the trading loop. No one could override the system. No one could place a trade based on a hunch. The firm was going to become a pure, systematic, scientific trading engine. So when you look back, it's so clear that their success wasn't some single aha moment. It was forged in the fire of a decade of trial and error. It came from hiring brilliant people from outside the field, from surviving years of painful losses, from obsessively cleaning data, and from learning from every single failure until they created their most important rule, the complete and total rejection of human intuition. And that really leaves us with a pretty fascinating thought to end on. Renaissance proved that the collective wisdom of thousands of data-driven signals could absolutely crush the gut instinct of even the smartest person in the room. Now, if that's true for the chaos of the financial markets, what other areas of our lives of human decision-making are just sitting there waiting to be decoded?
All right, today we're cracking open one of the biggest secrets on Wall Street, Renaissance Technologies. We're going to focus on their legendary Medallion Fund, this absolute black box that's been printing money like nothing else for decades.
So, how much money are we talking about? Get this, an average net return of over 30% a year for more than 30 years. And what's just absolutely insane is that this is after they charged some of the highest fees in the entire industry. I mean, a performance like that, it's statistically almost impossible.
Which of course brings us to the big question, the central mystery we're tackling. You have to forget everything you think you know about Wall Street traders and economic gurus. So how on earth did a team of mathematicians, linguists, and computer scientists, people with basically zero financial background, build the single greatest money machine the world has ever seen? Well, the answer doesn't start on Wall Street. It starts somewhere completely different.
with code breaking.
Okay, so here's the first secret ingredient, and honestly, it might be the most important one. It wasn't some financial wizard. No, it was a couple of code breakers who looked at the market and saw something totally different. They didn't see companies, they saw a language, a code, just waiting to be cracked.
Let's meet the guys, Peter Brown and Robert Mercer. Now, these two are not traders. They were computational linguists from IBM's legendary Candid project, which was basically an early version of the AI we see today. You know, they were experts in statistical pattern recognition, in language translation. Their job at IBM was literally to teach a computer how to translate Russian into English. So what did they do at Renaissance? They took that exact same thinking and pointed it at the market.
And this led to a completely new philosophy. I mean, they just threw out all the traditional economic theories about why a stock should go up or down. They didn't care. Their only focus was finding patterns. Messy ones, ugly ones, it didn't matter as long as they were statistically valid. They'd use brute force computing to find them, and if a pattern worked consistently, they used it. End of story. This was so radical, so different from how anyone else was thinking about investing.
All right, so you've got the right people in place. What's next? Well, the next ingredient became the absolute foundation of their entire operation, a totally obsessive, almost fanatical approach to data.
Their philosophy here was really simple: get more data than anyone else on the planet. And I'm not just talking about stock prices, oh no. They were collecting decades of obscure futures data, stuff from international exchanges. They even started collecting what we now call alternative data, like weather patterns and shipping information. Basically, if you could put a number on it, they wanted it in their system.
But you know, just collecting a mountain of data is only half the battle. They knew that bad data leads to bad models. It's garbage in, garbage out. So they went on this massive, obsessive mission to clean it. They built systems to hunt down and fix every possible error you can imagine: a wrong decimal point, a missing timestamp, a simple typo from way back when. For them, every single data point had to be perfect.
And then, finally, they built their own custom data formats. This made sure that every single piece of information, it didn't matter if it was from 1965 or from yesterday, was perfectly consistent and ready for their machines to read. This was a colossal amount of really boring, painstaking work that, frankly, no one else was willing to do.
And you don't have to take my word for it. The founder, Jim Simon, said it perfectly himself. He said their biggest advantage, it wasn't the fancy math or the faster computers. It was the quality and the cleanliness of their data. That right there was their true secret weapon.
So, you've got these brilliant code breakers, you've got this perfectly clean data. What do you do with it? You build an engine. But they weren't looking for one single magic bullet algorithm. No, instead, they built something more like an industrial-scale factory, designed to crank out thousands and thousands of tiny, profitable trading signals.
And this gets to the core of their whole system, something called an ensemble model. So forget trying to find one big idea, like tech stocks or the future. Medallion's engine was built to combine thousands of tiny, fleeting, almost microscopic signals. Each one, on its own, might only give them a teeny tiny edge, but when you put them all together, you get an incredibly powerful and reliable prediction machine.
And they really turned this into a relentless, factory-like process. It was a constant cycle. The researchers would just brainstorm any potential pattern they could dream up. Then, the computers would run these massive statistical tests to see if it actually held up. If it worked, boom, it gets deployed into the live model. And, this is so important, they were constantly reevaluating every single signal because they knew that patterns in the market don't last forever. It was a living, breathing system that was always improving.
Okay, so this brings us to the final and maybe the most revolutionary ingredient of all, the philosophy that drove the entire company. All this work, the brilliant people, the perfect data, the algorithm factory, it was all for one single goal: to completely remove the human being from the act of trading. And along the way, the team had this really counterintuitive breakthrough. They figured out that the best signals, the most profitable ones, the ones that lasted the longest, they weren't simple. They weren't the kinds of things a human could just spot and understand. No, the real gold was buried deep in the complexity.
See, their winning signals were what you'd call nonlinear and totally context-dependent. So what does that mean? Well, think of it like this. A certain price move might be a buy signal, but
And here's the catch. It only works if, at the exact same time, market volatility is super low and interest rates are doing this one specific thing, and the price gap between, say, oil and gold is just right. It's like this massive, multi-part puzzle that is just completely invisible to a human trader.
And this thinking led them to their most radical rule, the thing that really set them apart from the rest of Wall Street. Traditional firms run on trader intuition, on fear and greed. But at Renaissance, they had one strict, unbreakable rule. The model decides, always. A human could work on improving the model, sure, but they were absolutely forbidden from ever overriding a trade. Everything was fully automated. Zero emotion.
So, what happens when you take it all and put it together? You take these genius code breakers, you add perfectly clean data, you build an algorithm factory, and you layer on a philosophy of pure automation. Well, you get the most powerful and consistent trading engine the world has ever seen.
The reason the Medallion Fund worked so incredibly well is that it wasn't just one thing. It was everything working together. They had thousands of tiny, diversified signals, which meant no single bad bet could ever hurt them. They were making millions of super-fast, small trades, just letting those tiny statistical edges compound over and over again. And the craziest part? Because the model had no emotions, it actually thrived when markets got chaotic. During a crash, it was just harvesting profits while all the human traders were panicking. So in the end, Renaissance didn't just beat the market. They created a whole new kind of player in the game, a purely rational, data-driven machine. They proved that it was actually possible to build a perfect money-making machine. And that leaves us with a really provocative question to think about. What happens to our financial world when eventually every market is run by one of these things?
Have you ever heard of a hedge fund that's so secretive and so ridiculously successful that it sounds more like a myth than a real company? Well, today, we are prying open the black box of the Medallion Fund. It's arguably the single greatest money-making machine in the history of finance. And the whole story, it really starts with one unbelievable number.
To really wrap your head around how wild this is, you have to start right here. 66%. That was the Medallion Fund's average gross return. Not for one good year, for 30 years straight. To put that into perspective, guys like Warren Buffett, absolute legends, they're thrilled with 20%. Medallion was tripling that, year in, year out, like it was nothing.
So yeah, that brings us to the one massive question that hangs over this whole story. How? How in the world did a small, quiet group of scientists and mathematicians working out of an office on Long Island build something that could so consistently, so completely beat the entire financial world?
To even begin to answer that, we've got to start by looking at the machine's pure output. I mean, the numbers themselves tell a story that's honestly hard to believe, but they're the key to understanding everything else.
This just shows you the level of confidence they had. A normal hedge fund, they charge what's called 2 and 20. Medallion, they charged a completely unheard of 5% management fee and a 44% performance fee. And here is the absolute kicker. Even after they took that massive cut, their investors, who were just the employees themselves, still made more money than basically anyone else on the planet. Insane.
So how were they generating those kinds of returns? Well, the secret wasn't some Wall Street guru with a magic crystal ball. Nope. The answer was something way more systematic, way more scientific, and frankly, a whole lot more powerful. Let's take a look inside the black box.
And this is absolutely crucial to understand. Medallion wasn't about making one big, genius bet on Apple or Google. No, it was a system built from the ground up to find thousands upon thousands of tiny, fleeting, almost invisible statistical advantages, what they called edges, hidden in the noise of the market. Think of it like this. It's like finding a tiny flaw in a casino game that pays you a fraction of a penny every time you play. Now do that millions of times a day, and pretty soon you own the casino. This gets to the very heart of why they were so different. Their profits did not depend on the stock market going up. They didn't really care what the Fed was doing or what the inflation rate was. Their machine found profits in a way that was totally separate from all the usual things that drive Wall Street. They were playing a completely different game.
And the true genius of it all wasn't just a single trading model. No, they built a metasystem. It was a machine that could literally teach itself to find hidden patterns in any data set you fed it. We're talking corn futures, Japanese bonds, pork bellies. It didn't matter. The system could learn it. So let's say you've built a machine that can basically print money. What becomes your absolute #1 priority? Well, you've got to protect it at all costs. And that obsession led them to build a fortress of secrecy unlike anything the financial world had ever seen.
The founder?
Jim Simons, he made this historic decision. He kicked all the outside investors out of the fund. The reason was actually pretty simple. Those tiny little statistical edges they were finding, they were incredibly fragile. If too much money started chasing the same little patterns, the patterns would just disappear. Oh, and of course, it also kept all those unbelievable profits for the employees who were actually building the machine.
And this secrecy wasn't just a suggestion, like a friendly memo. It was institutionalized. Employees were strictly forbidden from talking about their work with anyone. The code itself was siloed, so one team had no idea what another team was working on. And the physical computer servers, they were kept in locked cages, totally cut off from the outside world. It was a total, complete lockdown.
And really, the entire philosophy can be boiled down to this one quote, straight from the founder himself. The second the world figured out their methods, the magic would be gone. Their entire advantage, their edge, it depended on absolute, uncompromising secrecy.
Now, a machine this brilliant doesn't just build itself. So who were the architects? Who were the people inside this fortress of secrecy? Well, the answer is probably not who you think.
They famously avoided hiring those hotshot Wall Street traders or finance MBAs. Instead, they went after pure problem solvers. A linguist, for instance, is trained to find the hidden grammar in language. Well, Medallion needed people who could find the hidden grammar of the financial markets. They hired codebreakers, astronomers, physicists, people who were experts at finding a faint signal in a whole universe of noise. They actually believed that prior financial experience was a disadvantage because it came with biases and bad habits they just couldn't afford.
And all of this created a culture that was the polar opposite of a typical investment bank. On Wall Street, so much is about ego, status, your gut feeling. At Renaissance, it was all about brutal honesty and collaboration. The only thing that mattered, the only thing, was what the data said. Your opinion, without cold, hard proof, totally worthless.
Okay, so now let's tie all of these threads together. Because the strategy, the secrecy, and the people, they created something more than just a really successful fund. They created a self-reinforcing system, a feedback loop that made them practically unbeatable.
And this is what made Medallion so unique. It actually thrived on chaos. When markets went crazy and other funds were blowing up, Medallion often had its best years ever. Why? Because human panic creates volatility. And that volatility, that noise, was the very thing their models were designed to find patterns in. For their machine, chaos wasn't a danger. Chaos was fuel.
Just take the 1998 crisis. It completely destroyed the legendary fund LTCM. They lost over $4.5 billion. That very same year, Medallion's machines just feasted on the volatility and posted massive profits. It proved they weren't just strong, they were anti-fragile. The crazier things got, the better they did. And all of this created the ultimate competitive advantage. You see the loop? More profits meant they could hire even smarter people and buy faster computers. That led to gathering more data and building better models, which of course generated even more profits. It was this perfect self-feeding machine that just got more and more powerful every single year, constantly widening the gap between them and everybody else.
So, in the end, what was Medallion? It wasn't just a hedge fund. It really became something else entirely. A kind of black box intelligence, always learning, always improving, built not on human intuition, but on pure math, data, and just relentless iteration.
Which really leaves us with this one final, fascinating question to think about. The story of Medallion isn't just about making money. It's a story that proves the incredible power of data, secrecy, and just a completely different way of thinking. And it forces us to ask, what happens when a machine is quietly built that can simply outthink an entire global industry?
All right, let's talk about a guy who looked at the total chaos of the financial markets and didn't see chaos. He saw a math problem, a solvable one. We're talking about Jim Simons, the man who basically broke investing. And look, when I say he broke investing, I'm not exaggerating. You can forget about Warren Buffett, forget George Soros. If you just look at the raw numbers, Jim Simons is, without a doubt, the most successful investor ever. His returns are so insane they almost look like a typo. So that's the big question, right? How on earth did a brilliant mathematician, a guy who, by the way, never even took an econ class, build this super secretive fund that nobody, and I mean nobody, could beat? To figure that out, we've got to go right to the source of the myth. Let's start with the impossible money machine. And yeah, we're talking about the Medallion Fund. This thing was pure legend on Wall Street. So what is the Medallion Fund? Well, it's the crown jewel of Simon's company, Renaissance Technologies. And here's the kicker. It's totally private. Only employees can get in. And its performance? It's just off the charts. We're talking the single best track record in the history of finance. The highest returns, the lowest risk. It's nuts. And because nobody could figure out how they did it, these wild rumors started flying around. People were saying they had secret government data or some kind of super advanced sentient AI, maybe even illegal trading privileges. But the reality, honestly, it's way more impressive than any of that. It wasn't one silver bullet. It was decades of painstakingly collecting their own data, relentless scientific work, and just patiently iterating. They found thousands of tiny, almost invisible predictive signals, these little edges that on their own meant nothing. But when you put them all together, you got an unstoppable money-making machine. You know, Simons himself couldn't stand all the myths. He always said, there's no magic here. It was just a ton of hard work. And it's that relentless scientific approach that ended up changing, well, everything. Yeah, that scientific approach didn't just make a bunch of physicists and mathematicians rich, it completely rewrote the rules for all of Wall Street. So here's the core idea, and it was revolutionary at the time. For decades, everyone in finance was taught that markets are random and efficient. You can't beat them. Simons came along and said, nope, that's wrong. He believed human behavior, even all jumbled up in the market, creates patterns, and math is the perfect tool to find them. And you can see the ripple effect right here. First, Renaissance just proved it. They proved the markets weren't random. That success then kicked off this whole new industry of algorithmic and high-frequency trading. All of a sudden, the big Wall Street banks were playing catch-up. They had to build their own quant teams just to compete. And the crazy thing is, all this automated trading actually made the markets more efficient, closing the very same loopholes that Renaissance first found. What's just wild is how far ahead of their time they were. I mean, this whole model of models thing they were doing, using tons of different predictive models together, constantly retraining them on new data, letting the data decide which models were best, that's basically a blueprint for the machine learning and AI we're all talking about today. They were doing this decades ago. But the story doesn't stop with making a ridiculous amount of money. What Simons chose to do with that money is, in its own way, just as revolutionary. That brings us to his philanthropy. The numbers are just staggering. The wealth that Medallion created is almost hard to comprehend. But the amount of money that Simons and the other key people at Renaissance have given away is just as mind-blowing. We're talking an estimated $100 billion directed to philanthropic causes. And you can see his personality reflected in where that money went. A huge chunk, obviously, went to basic math and science research, but also a big focus on education, on autism research, which was a personal cause, and on funding big data projects in other fields. He wanted to apply the same analytical thinking everywhere. And this quote right here, this is the key to his whole philosophy on giving. He basically took the same approach he used at Renaissance. Give brilliant people stable, long-term funding, don't tie their hands, and just let them go. He believed that kind of freedom is what leads to those huge, unpredictable breakthroughs. Now, this data-driven culture that Simons built had another, much more complicated impact on the world. It actually led to a pretty dramatic split in the political influence coming out of the company. And this just lays it out so clearly. You had Jim Simons, who used his money to quietly support democratic causes, always pushing for science, education, and policy based on evidence. Then you had his co-CEO, Robert Mercer, who went in a completely different direction, becoming this huge financial force behind conservative groups like Breitbart and, famously, Cambridge Analytica, which pioneered using data to target voters. So the big takeaway here really isn't about which side was right or wrong. It's about seeing this powerful truth emerge. The exact same data science techniques that could find hidden patterns in financial markets could also be used to influence elections. Data had transformed politics just as much as it transformed finance. So for this last part, I want to pull back a bit and look at the whole picture of Jim Simons' legacy. Because it really isn't just about the math or the money. It's a story that was deeply shaped by personal loss, too. You see, for all of his incredible success, Simons' life was also marked by absolute tragedy. He lost 2 of his adult sons in 2 separate, awful accidents. People who knew him say that these losses changed him profoundly, giving him a deep sense of humility and really fueling his drive to use his fortune to make a real impact on the world. And this question, something he asked a lot, really became his guiding principle later in life. Making money wasn't the point anymore. It was just the fuel for a much, much bigger mission. I mean, just look at this timeline. The man's life was a series of complete reinventions. He starts as a codebreaker for the NSA during the Cold War. Then he becomes this world-renowned, award-winning mathematician. Then he decides to start the entire quantitative trading revolution. And finally, he becomes one of the most important philanthropists in modern history. It's an incredible arc. So when you try to sum up his legacy, you really got to look at it in 3 parts. On the financial side, he's the GOAT, the greatest of all time, period. Intellectually, he completely changed how we think about markets, and then used his wealth to fund the next generation of science. And on a human level, it's just this powerful story of a brilliant, curious mind dealing with tragedy and trying to make a difference. If you had to boil it all down to just one thing, it's this. Jim Simons proved that math isn't just some abstract thing you do on a chalkboard. It's a tool, a powerful tool that can actually decode the secret patterns of the world around us. And that, I think, leaves us with a really fascinating final thought. Simons used math to find order in the chaos of the markets. So it makes you wonder, what other huge, chaotic systems, everything from climate science to genetics to society itself, are just sitting there, waiting for someone to find the right math to decode them too?